friends, welcome back to my channel. So in this video I will be considering the IPO of one company that is open for subscription today. So the company I will be discussing is Happy Forgings Ltd. So the IPO of this company is open from December 2019 and it will close for subscription today, that is December 21, and the allotment is expected on 22nd December, that is Friday, and it will actually expected to be listed on exchanges on 27th, that is next Wednesday, 27th December. So the IPO price band is from 808 to 850 per share, and the minimum lot for the application is 17 shares, and the minimum amount investors need to apply is 14,450 rupees. So regarding this company, Happy Forgings Ltd, it is actually a company that is incorporated in July 1979. It is an Indian manufacturer specialized in designing and manufacturing heavy forgings and high precision machine components. They manufacture, design, and test various products such as crankshafts, front axle carriers, steering knuckles, differential housings, transmission parts, pinion shafts, suspension products, and valve bodies at different industries and customers. So they not only serve automotive industry, they actually serve other also manufacture parts for the wind later sector also. So their main customer base include AM India Manufacturing Corporation Limited, Ashok Leyland Limited, Bongifoli Transmission Private Limited, Dana India, IBCC Industries Private Limited, International Tractors, JCB India Limited, Mahindra and Mahindra, etc. So Raj Engines, SML, Isuzu, etc. So they have served customers in various regions including Brazil, Italy, Japan, Sweden, Thailand, Turkey, United Kingdom, United States of America. They have 3 manufacturing facilities, 2 in Kangwal and 1 in Dogri, all located in Ludhiana, Punjab. And they have increased the revenue by 41% in the last 1 year. And so that is one point to note, that they only have manufacturing facility in Ludhiana and Punjab. And regarding the financial performance of Happy Forgings, they actually posted a revenue of 876 crores in FY21 with a net profit of, they posted revenue of 590 crores with a net profit of 86.45 crores. Revenue increased to 866 crores in FY22 with a net profit increasing to 142 crores. It further increased to 1,202 crores in FY23 with the net profit increasing to 208 crores. And for the first half, they posted a revenue of 675 crores and the net profit is 119 crores. So they are likely to report over 1,300 crores revenue and the net profit of over 230 crores. So the revenues actually increased from over 590 crores to 1,300 crores in the last 4 years, and expected to increase. And the net profit is likely to increase from 86 crores to over 230 crores this year. So there is a good growth in both revenue and profit. So it is a very good profitable company. So balance sheet is also very strong. It actually have reserves of over 1,100 crores. So the company is actually coming with the IPO in the price band of 878 rupees at face value 2. So the equity capital is will increase only to just under 20 crores after the issue. So the company is a very good profitable company. And regarding the EPS that is expected after the issue, the EPS is expected to be around 23 to 25 based on the FY24 earnings. So based on that, the price earning multiple will be around 36 times. So that is a reasonable valuation for a company in the forging sector, where the many companies are actually trading at around, Bharat Forge is actually trading at over 80 to 100 times, and many other companies like Ramakrishna Forgings, Forgings, there are actually, some companies are actually trading in the 20 to 30, 40 price earning multiple. So this is a reasonable valuation for a good company that actually have a good earning growth and have a large number of customers. So they are trying to command a market of 8,742 crores. And regarding the oversubscription figures for this issue, the issue is already oversubscribed 7.87 times the retail segment at the end of second day, and the HNI segment is already oversubscribed 17 times. And regarding the review by different brokers, most brokers have subscribed rating, 13 brokers have subscribed rating the IPO, none have a avoid rating. And regarding the review by Dilip Davda, he also has a subscribe rating on his IPO in this website, chitorga.com. And regarding the current grey market premium for this issue in the website 5paisa.com, as on the 20th December, the grey market premium has increased to 444. So that means that the issues the Happy Forgings Ltd is actually likely to make investors very happy and likely to list at around, based on the IPO pricing of around 850, is actually expected to list at around 1,300 levels based on the oversubscription figures, which will actually be we will be knowing it only at the end of the third day, that is today. So we are actually expecting a very strong listing, and at the level of 1300, the issue will actually the price and multiple will be over 40 times. That will be slightly expensive. So if you are able to get the allotment in the IPO, it will be a very good investment for long-term investment for very good returns in future, considering that it's actually having a good earning growth. And regarding the analysis by Dilip Davda in their website, they actually mentioned that it is one of the leading and largest engineer and manufacturer of complex precision machines. So in their review, they have mentioned that they are one of the leading largest lead manufacturer complex precision components in India. So they actually had a steady growth in top and bottom lines in the last few years. So they actually supply to products to renewed OEM clients globally, and based on the FY24 earnings, the issue appraised reasonable price. Investors can actually invest for medium and long term rewards. So they are the fourth largest manufacturer of heavy forging machine components in India in terms of forging capacity. So they actually cater to domestic and global original equipment manufacturers manufacturing commercial vehicles in the automotive sectors, while in the non-automotive sector it actually caters to the manufacturer of farm equipment, of heavy vehicles, and the manufacturer industrial equipment and machinery for oil and gas, power generation, railway and wind turbine industries. They have 40 years experience in the manufacturing supply of quality complex components, and they have emerged as a leading player of domestic crankshaft manufacturing industry. This is the second largest production for commercial vehicle high horsepower industrial crankshafts, and their strength in the machining and overall value addition in products enable to achieve the highest EBITDA margin among the peers. And it is one of the few companies in India with the capable to manufacture high precision safety critical components, leading OEMs including manufacturer of commercial vehicles, farm equipment, off-highway industrial equipment, and machinery for oil and gas generation, railways and wind turbine industry. And their customers also mentioned here, like AM India manufacturing, that's already mentioned by me earlier. So then regarding their manufacturing facilities located only in Ludhiana in Punjab, there is one risk related to geography. They don't have any manufacturing facility outside Ludhiana, and they have an aggregate annual capacity of forgings from they increased the capacity from 67,000 metric tons and 29,500 metric tons to over 1 lakh metric tons and 46,100 metric tons in the FY23. And in the September, they actually increased the capacity to 1,20,000 metric tons and 47,200 metric tons. They are increasing the capacity gradually based on the increased demand for their products. They had 3,070 employees in their payroll. And regarding the book learning manufacturer issues, JM Financial, Access Capital, and Equitas Capital, Motilal Oswal is the link in time is registered for this issue, and the paid up capital will increase to over 18.84 crores after the issue. So the company is trying to command a market for 8,007 crores. And regarding the peers mentioned here, so they mentioned that Bharat Forge, Craftsman Automation, Ramakrishna Forgings, Sona BLW Precision, as they have listed peers, they are trading at 45, 47, 47 times, 68 times. And the overall review in this website is that they have actually mentioned as this can be applied for long term rewards. So they have posted good stock and bottom line growth. Regarding the review by different brokers, all the many brokers have a subscribed rating IPO like Rehan Capital Markets, Access, BP Equities Wealth, Dilip Davda Investments Limited, JM Finance, Marwadi Shares, Nirmal Bank. Regarding the review by Nirmal Bank, this mentioned that they are actually one of the fourth largest in the manufacturing complex forgings. They actually cater to global OEMs. So the global forging and machine market expected to grow a CAGR of 5% by FY29, and the net proceeds of these issues actually used for the purchase of equipment plant worth 187 crores and the prepayment of borrowings up to 143 crores. And regarding the valuations are at 38 times FY24 EPS appears attractive compared to peers. So they actually recommend a subscribe in this IPO. And regarding the revenues are actually likely to increase to over 1,346 crores in FY24. And the profit after tax is likely to be around 239 crores, and the EPS is expected to be around 25. So the issue is actually coming at a price and multiple of over 33 to 35 times. So, and regarding the company background, so they are actually present from 1979. They actually manufacture product portfolio is also mentioned here, like they manufacture crankshaft, front axle components, differential case and suspension products, They actually manufacture products for the wind turbine industries, railway parts, oil and gas industry, valve bodies, and transmission parts. They actually manufacture different forging components for different industries. And investment rationale mentioned here is that the global forging and machining is expected to grow CAGR by FY29. By 29, they have long-standing relationships with customers across different industries. So that is the revenue mix is 79% revenues from the domestic market and 21% is in the export market. So they have good revenue growth. So overall, the issue actually looks very good from an investment perspective. I am planning to apply for this IPO. And if you are also convinced the issue after the listing based on the grey market premium of over 450, the issue will be the company will be slightly expensive in valuations. But if we are able to get the allotment in the IPO, or if we are able to get some dips after the IPO listing, it will be a good investment for long-term investments. I am actually expecting long-term targets of over 1,500 or 2,000 is possible in this company. So I am actually planning to apply for this IPO. So if you are actually also convinced about the prospects, you can also apply for this.